The mega merger battle between Frontier, JetBlue, and Spirit Airlines will face a crucial vote today. Spirit's proposed merger with Frontier does not have enough support from shareholders, while talks with JetBlue have yet to produce a breakthrough. Spirit shareholders will hold a vote today. Big corporations are starting to release their second quarter earnings. McDonald's revenue fell short amid COVID restrictions in China and inflation, while Deutsche Bank beat expectations with a net income of more than $1 billion. Companies like Boeing, Meta, and Spotify will release earnings later this week. And the Federal Reserve plans to raise interest rates again. If rates do go up, it would make borrowing more expensive for everyone. For more on this, let's bring in Aaron Wineman. He's a finance correspondent for Insider and the author of the 10 Things on Wall Street newsletter. Good morning, and thanks for joining us. First of all, how much is the Fed looking at raising these interest rates by?
Sure. So I think the expectation is that it's going to be another 3/4 point rate hike today, similar to last month, or the same, I should say. And I think this will hold true because the Fed does need to continue to curb inflation, which it's made clear that this is its number one priority right now.
And what are some of the effects of that we can expect to see if they do that?
So the effects effectively on Americans' wallets, if you like, if the rates that one pays on familiar financial products like savings accounts, mortgages, credit cards, they're likely to keep rising. Interest rates have been low for so long that many consumers, particularly millennials and Gen Z folks, if you like, haven't really known a time when borrowing wasn't cheap and savings vehicles didn't pay next to nothing. Unfortunately, many consumer-facing industries have taken those higher costs and passed it on to us. So if you think airlines impacted by higher jet fuel or materials for toiletries being costlier, this means we're effectively paying more for essential goods, and in the case of airfares, discretionary spending. But the hope is that the behavior from the Fed and the rate hikes means we as consumers tone down our spending habits and in turn cool down the economy, if you like.
Do you think that's likely to happen?
In terms of us cooling down our spending, I think
as
so.
a direct result, because, you hear that, but we saw a lot of people saving money during the pandemic and spending money. And at the same time, you have this narrative of folks losing jobs. And so all of this sort of coming together, will this potential rate hike actually stop people from spending more money? Do you believe that?
I do, because I can only really speak for myself in regards to that question. And the cost of everything has gotten higher, from my rent to the grocery bill. I don't have a car, so I don't have petrol costs, but that's gotten a lot higher as well for a lot of people. But as I mentioned earlier, some of the sort of, essentials, if you like, or the things that impact people's wallets, like credit cards and mortgages and savings, this has all come under certain strain. So I guess perhaps the first thing we could look at is, say, credit cards, right? Mm-hmm. Most credit cards have a variable rate, which means there's a direct connection to the Fed's benchmark. And rate increases, while they're not likely to flip cardholders' financial world upside down, all these rate hikes, even the smallest ones, are unwelcome news for anyone with credit card debt. So therefore, one way I could think to get ahead of, your credit card debt, if you have it, is borrowers, say, revolving debt should find zero interest balance transfers, and that way they can start to pay down the balance. And to your earlier question, I think this is one way that we will kind of curb our own spending out of necessity almost. I certainly hope so.
Yeah. Well, is there a certain effect that you think this has specifically on people that are first-time home buyers, that are looking to get a mortgage? And is there, at this point, it might be too late to try to do that, and those processes take so long. But what advice do you have for those folks?
Sure. So I think in terms of mortgages, as the Fed raises rates, as as everyone knows, long-term fixed mortgage rates are also heading higher since they're directly influenced by the economy and inflation. But sort of getting ahead of the tide of rising rates can save borrowers thousands of dollars. And what I mean by that is, those consumers with, say, adjustable rate mortgages or home equity lines of credit, they could probably take a close look now at their financing options and possibly consider moving to alternatives like, say, a fixed rate mortgage. a lot of people haven't really tapped into their home equity line for improvements as well. So that could be another way to perhaps not just lock value into your current home, but also get a rate that's a bit more favorable. And to your point about first-time home buyers, as I mentioned earlier, if the Fed continues to boost the rates, which it looks like it's going to do in the short term, but if it continues to do that over, say, 2 to 3 years, home buyers are still going to see mortgage rates rise significantly.
Aaron Wineman, thank you.